What is up, my friends? It is finally time for a trade breakdown. Yesterday, I posted this screenshot in the Telegram. We took these sells on gold. The market moved down, perfectly hit our targets, and I managed to pass phase one of my funding challenge because of that. So, guys, let's get started. As usual, on the monthly time frame, we did a monthly reject monthly off of this support. One step lower on the weekly time frame, we had a weekly bullish breakout. Then the monthly came into this fresh resistance, as well as perfectly rejecting this trend line. We then had a move down on the monthly time frame. We are currently rejecting this monthly support. It's an open close resistance, broke, become a support. So we are currently rejecting this. The monthly candle has not closed yet, nor have we had a weekly bullish breakout. But the monthly time frame is bullish regardless, right? So let's put this here, monthly bullish. And let's move on to the weekly time frame. On the weekly, keep it super simple, guys. We had a weekly reject weekly over here. This open and close level. And on the daily time frame, we had a daily bullish breakout. Okay, so weekly time frame, bullish, correct? Now for the daily time frame, same as that weekly level, also we had a daily reject daily, and of course there's an H4 bullish breakout in here, but even more recently, guys, we had a daily reject daily of this level, and we had an H4 bullish breakout. So the daily time frame is bullish as well, guys. All three time frames are bullish. So, if all three time frames are bullish, logically, what can stop that bullishness or cause at least a reaction to the downside if the monthly is bullish? It's got to be a monthly level or a weekly level. Over here, we had this fresh weekly resistance. Also, this resistance was somewhat caused by the monthly reject monthly, right? So as the market was coming up into this level, we can check using multi-time frame what else this level is aligning with. So weekly fresh, daily level as well, not fresh, not a fresh level, right? But as you guys know, higher time frame levels can be used more than once, guys. Higher time frame levels can be used more than once. Let me give you another example of this, guys. Over here, we had this weekly level. Not fresh, right? Look, this wick tapped into it. But where did we move from? Perfectly rejecting this weekly level, right? So same thing going on here, guys. Weekly level, MTF with the daily level, MTF with the H4, and MTF with the H1, right? So as the market is coming up and approaching this level, we can set a high risk entry. This is not a low risk entry, guys. All the time frames are bullish, right? But if you want to catch the tops and the bottoms of the market and have very pretty looking entries, then it's got to be a high risk entry, guys. High risk, high reward, of course. So as we were coming up into this level, down to the H1, it's the same, right? And yes, we do have a wick going through it, but let me tell you something, guys. When we have a large wick going through a level, it is a sign that that level can most likely be used again. Just a hint, guys. So what did I do? I simply set my limit order over here, right? That was the first trade. I took profits around here, around this level, because I just needed to pass phase one, right? So that was the first trade. Turn this red over here, right? First trade over there. Second trade, guys. Once we had this rejection of the level on the H4 time frame, new resistance formed. Bullish candle, bearish candle, fresh resistance. So we mark out this level. And as we came up, approaching the level, I set my limits. So first one was actually set over here. Like this. Because we have two levels, I don't know if the price is going to come, tap into this one and drop. And the second was up over here, right? So I split my risk and got into both of these trades. Just in case one of them didn't work out, you've still got the other one. You've got to be flexible in these markets, guys. So those were the second two trades. That's 3. And for the last trade, which was just before the news on oil came out, we have this beautiful trend line over here, which I'm going to get into in just a second, because first we've got to talk about this trend line. Point 1, point 2, following that, rejection, 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 right? Even here, rejection again. So this trend line finally got broken through over here. That was a massive confluence to be going short, because we have the ascending trend line being broken and we have the descending trend line being respected, guys. Look at these rejections of this trend line, because actually my fourth trade, I had a limit order set over here. Just clear this up a bit. I had the order set over here. And I'm sure you guys can see, why did the market not come up, tap into there and drop? Because it was respecting the trend line, right? So at this point in time, we had this H1 resistance forming, right? And also on the H4, not on this broker, but on Oanda, you've got to be analyzing on multiple brokers, guys. On Oanda, we had this H4 level forming, 2002, right? H4 level. And what is our level on Saxo? 2003, right? This one. And 2002 is over here, guys, right? So that gave extra confluence for this level, right? Because on Oanda, it's an H4 fresh. So after tapping into this trend line, we came up into this fresh H1 resistance, right? Just a continuation trade. And that was the fourth one to go down and meet the targets, right? So those were the trades. First one, super high risk. But after that, the continuation trades, medium to low risk, guys. I mean, look, you've got the H4 level forming after a rejection. Following that, you've got multiple opportunities for a trade on the H1 to continue the direction. Okay, guys, daily pullback, weekly pullback, monthly pullback. Simple. So those were the trades that I took, which I shared on the Telegram. What's going on now on gold currently? Well, all the time frames are still bullish, so we can look to buy now, right? This was just a pullback. If it ends up going and creating a daily bearish storyline, maybe weekly bearish storyline in the future, then we will adapt. But for now, let's mark out where we are looking to buy, guys. So we have got this daily level over here. It was a support, broke, become resistance, broke again, become a support. So what is that? A left shoulder, guys, right? So we've got this daily level. We've got this daily level right below it. Of course, we've got this open and close level as well. And let's check the H4. So for me, guys, this daily level up here is not something I'm going to be looking at because on the H4, it's already been traded into and is no longer fresh. So I'll be skipping that one. Next, what do we have? We have this daily level, which was the left shoulder, right? On the H4, not so much a refinement, but above the level, we have this H4 resistance become support. And for the level below, which is my preferred level, we've got this H4 left shoulder and this left shoulder, right? So yeah, and if we can find some trend line confluence, that would be amazing as well to help us choose the level correctly. You can drag our trend line from here. You can also check on the H4. What do we have? Can refine it a bit, right? So this level, this trend line is lining up. Oh, not really lining up with these levels. We've got to find a lower angle. Yeah, so the H1 would work a bit better here, guys. So what do? We draw the trend line. We go to the current market price, pull it out a bit and down, and we can see that the trend line is aligning very much with these lower levels over here. So for me, I prefer a higher win rate. So I will just skip out on this level and focus on these ones below for buys following the daily bullish, weekly bullish, and monthly bullish. All right. I hope you guys enjoyed. I hope you guys took some value from this video. Catch you guys on the next one.